Hey guys, it's Justin Goodbread here with Financially Simple. So I had a prospective client reach out to us and they said, Justin, I need to sell my business. I'm like, sweet, let's sell the business, but I can't get what I need for the business. So I began talking to this individual and they had recently had the business appraised and the business came in valued at $900,000. Now, the way the valuator came up to that value was they took the EBITDA, earnings before depreciation, interest, taxes, deduction, amortization, EBITDA, and the EBITDA was $300,000 on this particular business. And there was a multiple in effect of 3 times. So they basically took 300,000 times 3 equals $900,000. So the business was appraised at $900,000. And that is questionable, but nonetheless, that's what the evaluator said the business was worth. The prospect needs $1.3 million in sales price to reach their personal financial goals. So we're off about $400,000 in value. So that's a 30-40% increase, if not greater. And it's late in the day and I can't do this in my head just super fast. But that's a huge increase that they needed. And so they came in, they said, Justin, the way we're going to have to do this is we're going to have to go in and increase our EBITDA or increase our sales from $300,000 up to about $450,000. Like increase our earnings. And in doing so, we're going to reach our $1.2, $1.3, $1.4 million sales price. And I said, that's interesting. Why are you approaching the profitability? Why are you approaching the earnings of the company? Why not approach the multiple of the company? And so in our CPGA course and our CEPA, Certified Exit Planning Advisor course, and Certified Value Growth Advisor course, we talk specifically about increasing values of companies. And in fact, my new book that's coming out, The Ultimate Sale, I can't wait till you see it, is talking about the value issue and how you can sell your business at some point. But I digress. So I said, let's focus on not necessarily going out and trying to increase more sales. Increasing sales can drive up company-specific risk. Let's work on increasing the multiple, that multiple number. And I said, for example, let's say we maintain our $300,000 value, or sorry, $300,000 in EBITDA, but instead of getting a 3 times factor, we got a 5 times factor. So let's increase the factor up, and by doing so, we would move the net worth of the business from $900,000 to $1.5 million. But here's the catch. It'd be very hard to increase the factor of the business, the price factor of the business, without also increasing EBITDA, because when the business becomes more efficient, when the business becomes more sellable, ultimately the business will become more profitable and the business will increase EBITDA. So go back to the example. We had a $300,000 EBITDA that was getting a value of 3 times, which means the business was worth $900,000. They need an excess of $1.2, $1.3 million to reach their goal. They said we can increase the EBITDA and keep our factor the same. I said, let's not do that. Let's increase the factor of the business, increase the valuation method of the business, and by doing $300,000 EBITDA at a factor of 5, we now have a value of $1.5 million. But it's not going to happen. What more than likely would happen is as the business is improved, as the processes, I never know how you say that, and the business improves, more than likely EBITDA is going to increase. So let's say that instead of trying to grow the revenue of the company, the EBITDA of the company from $300,000 to $400,000 or $500,000, let's just say we moved it up $100,000. Let's just say we went 30% increase in EBITDA from $300,000 now to $400,000. But we also achieved a multiple of 5. 400,000 times 5 is a $2 million sales price on this company. So in effect, there is a $1.1 million business value that we can increase with a little work. It wasn't going to be easy, but we can increase this systematically and quantifiably over a period of time and thus close the value gap. And in fact, get them really close to where their peers are selling at. You see, so whenever you start dealing with business and growing your company, what you want to focus on is the value of the company and focus on growing the value. Growing profitability is not bad. You may want to focus on growing profitability, but if you do that and do that alone, you're going to end up increasing company-specific risk, which will then, in effect, decrease the value of your company. So you always want to focus on value. You're going to learn more about this in upcoming weeks. Hey, and check out the podcast, Financially Simple. I've been dealing with this now through 30, 40 episodes already on increasing company value and profitability. Check it out. And the book's coming up, The Ultimate Sell. Can't wait for you to see it. It'll be live before too long. Hey, look, guys, it's Friday. It's time to check out. Time to go home and split some wood this weekend. Until next time, y'all go out and make it a great day.